Welcome. In this video, will ZBCN coin continue to rise? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. There was a horizontal resistance level on the chart that has long been carefully monitored and seen as a strong obstacle in the eyes of traders. In the past, this area had limited the price's upward movement many times in the past and stopped upward attacks by increasing selling pressure. However, recent developments have shown that the market has reached the strength to overcome this obstacle, and that buying demand is now becoming more dominant. The price broke this strong resistance level clearly and decisively upwards, giving an extremely positive signal in terms of technical analysis. Such resistance breaks are transformational events in the markets. This is because resistance levels are often considered psychological boundaries. These are the points where strong sell orders accumulate, as they are where traders have stopped the price from rising in the past. However, if the price managed to break through this zone with high volume and strong momentum, it can be concluded that the market dynamics have started to change and buyers have taken control. The movements of the price after breaking this resistance point also give very positive signals. After breaking the resistance level, the price retraces back towards this area and makes a retest here, which is interpreted as a very healthy behavior in technical analysis. A retest means that the price is now testing this area, which was previously resistance, as a support. If this test is successful, it indicates that buyers are active here, unless the price breaks below this level. This strongly supports that the price can now continue its uptrend from this area. The retest phase is usually the period when the uptrend is consolidated, traders' confidence increases, and it is healthier to take a position in terms of technical analysis. Because at this stage, the price confirms that the previous resistance is now working as support. This confirmation is critical to the permanence of the trend reversal. At the same time, the formation of such structures indicates that the market structure is now starting to move in the form of high highs and high lows, which is the basis of an uptrend. The fact that the price has broken through this strong resistance level also signals a significant change in investors' expectations. This is because such breakouts are often accompanied by improvements in news flow, fundamental analysis data, or general market sentiment. This heralds a bullish breakout that is not only technical but also psychological and fundamental supported. A break of resistance followed by a retest starts the process of identifying new upside targets. At this point, the broken resistance level now acts as a strong support. In technical analysis, this transformation is a very important transition phase, because this area, which was previously seen as a selling area for investors, now offers a buying opportunity. This transformation establishes a new balance among market participants. Those who were previously selling at this level now want to buy on a return to this level. This allows the support level to strengthen and the price to react upwards from there. The breakout of resistance and the subsequent retest often creates significant opportunities for traders who use a breakout trading strategy. These traders are usually looking for a safe and confirmed entry point after the price breaks through such critical levels. This is where the retest comes in, signaling to the trader that this is now support. There is a high probability that it will go up from here. This accelerates the upward movement of the price and causes the wider investor base to join the movement. After this resistance is broken, target levels are also revised upwards. New peaks that were previously unreachable start to be talked about, because breaking resistance means that there are fewer obstacles in front of the price. This in turn allows the price to rise more freely, but we cannot decide the analysis only by resistance. Let's look at other metrics. Stay tuned. Upon careful examination of the chart, a classic technical analysis formation known as a cup formation is clearly visible. This formation indicates that the market has been progressing in a balanced, patient, and determined manner for a long period of time, and has then entered a strong recovery process, reaching its peak again. The price has successfully completed this cup formation and has begun to move steadily toward the target as required by the formation. This development indicates an extremely positive picture from a technical analysis perspective. The cup formation is a structure that typically appears in medium and long-term charts and provides highly reliable signals for investors. For this formation to occur, the price must first begin to decline from a certain peak level, then form a bottom level over time, and rise again to reach the previous peak. This process indicates that the market first corrected itself to eliminate weak hands, then gathered strength and entered a new upward trend. This signals increased investor confidence and strengthened buying demand. Looking at current price movements, it is very clear that the cup formation has been completed. The price has broken above the critical resistance level, known as the neckline, by completing the upward movement on the right side of the formation. This breakout confirms the formation technically and indicates that an upward movement toward the cup's target zone has begun. In such formations, the target after the breakout is typically calculated by adding the distance between the cup's deepest point and the neckline to the breakout point. This provides a technically clear and positive target. Cup formations also provide important information in terms of market dynamics. The formation of this structure takes time and offers serious opportunities for patient investors. This is because the decline on the left side of the cup is usually the result of panic selling and profit-taking. However, the stabilization of prices in the bottom region increases buying interest and renews confidence. As the price rises over time, investors re-enter the market and the right side of the formation is completed. During this process, the price reaching its previous peak level indicates that the market has recovered from its previous losses and is now focused on new targets. Once the formation is complete, the price is expected to rise by an amount equal to the depth of the bowl. This technical expectation greatly facilitates both investors' determination of price targets and their analysis of risk-return ratios. Especially if the breakout is accompanied by high volume and is strong, the likelihood of reaching this target is much higher. This is because high volume confirms the validity of the breakout and indicates that buyers in the market are motivated. In the current situation, the strong and steady progress of price movements increases the likelihood of the target being achieved. Such formations are also extremely valuable in terms of market psychology. This is because the cup structure graphically reflects the emotional cycles of investors. The initial decline represents despair and fear, while the bottom region symbolizes patience and waiting, and the rise symbolizes the rebirth of hope and confidence. This transformation process indicates that the market has matured and is preparing for a new upward trend. Therefore, cup formations produce a positive signal not only technically, but also psychologically. The price moving toward the formation's target provides a significant advantage in the decision-making process for investors. This is because momentum typically kicks in after such structures. In other words, the price begins to move faster, more decisively, and more strongly than in previous stagnant periods. This increases the likelihood that the pattern's target will be tested in the short term. It also encourages investors to expand their positions and boosts confidence in the market. The MACD indicator is an extremely effective and powerful momentum indicator that is frequently used in technical analysis. When examining the current chart, the movement in the MACD lines shows a striking upward and accelerated rise. This type of movement clearly demonstrates that there is serious power behind the market and that significant momentum is building in the upward direction. In particular, the MACD line breaking away from the signal line and exhibiting a sharp upward rise is an extremely positive technical signal, indicating that buying pressure is intensifying in the market and the trend is strengthening upward. The fact that the MACD lines are moving upward so decisively and rapidly indicates that market participants are increasingly taking stronger positions and that the trend is solidifying. This situation may represent the beginning of a deeper and more fundamental upward trend rather than merely short-term price movements. In technical analysis, the MACD exhibiting such a clear upward movement is typically interpreted as a bullish continuation, meaning the bull market is continuing. This is because the indicator provides strong signals about the market's internal dynamics based on the moving averages of past prices. In the current situation, the upward divergence of the MACD lines reinforces the expectation that the price will continue to rise, benefiting from this momentum. We should pay attention to the MACD